Imagine waking up one morning finding out that the world's most talked about cryptocurrency, XRP, could be valued at over $122,000 per token. Sounds unbelievable, right? Yet, according to one bold valuation model, that's the fair market value under a future scenario where nearly all global wealth is tokenized and running on blockchain infrastructure. Is this pure speculation or a glimpse into the not so distant future? Today we're diving deep into some of the most surprising and thought-provoking cryptocurrency market news out there. In this episode, we're going to explore a recent analysis suggesting XRP's fair market value could soar into six-figure territory. We'll break down the collateralization model behind this jaw-dropping number, examine the assumptions that kind of got us here, and look at what it all means for the broader crypto ecosystem, from Bitcoin all the way through to Ethereum. Have you ever wondered what the cryptocurrency world would look like if literally everything, real estate, commodities, derivatives, and even central bank reserves were transformed into tokenized assets on a blockchain? That's exactly the kind of future scenario that 𝗕𝗘𝗪𝗪𝗀 considered when they put together what's known as the collateralization model for assessing XRP's fair market value. So what is the collateralization model, and why is it causing such a stir? Well, developed by the venture capital firm 𝗕𝗘𝗪𝗪𝗀, this model isn't just another price prediction. Instead, it's a theoretical framework that starts from the very bold promise. Imagine all global wealth, not hundreds of trillions of dollars, even quadrillions, which include derivatives, is kind of represented by tokens on the blockchain networks. In this highly interconnected world, XRP isn't merely a cryptocurrency used for fast cross-border payments. It becomes the very bedrock for collateralization of these tokenized assets. Now, this scenario is anchored in the concept of tokenization, a process where real-world assets like property deeds, stocks, bonds, precious metals, and, well, more, are represented as digital tokens on a blockchain. According to 𝗕𝗪𝗪𝗪𝗀's collateralization model, as the tokenization of global wealth accelerates, certain digital assets may step into new roles. Instead of just facilitating transactions, tokens like XRP could serve as collateral, essentially acting as the backbone of the entire financial systems digitalized on a distributed ledger. Now, to put that into simpler terms, if you've ever taken out a home mortgage, you know the house acts as collateral for the loan. In a fully tokenized economy or ecosystem, imagine XRP playing the role of the ultimate collateral that secures assets of all shapes and sizes. The ripple effect, pun intended, is that if XRP becomes that underlying layer, its value, according to the model, could skyrocket to unimaginable heights. Now, 𝗕𝗪𝗪𝗪𝗀 compiled several valuation models last year to explore how XRP might be priced under various conditions. The collateralization model is just one of those approaches, but it's the one that has the crypto community talking the most because of its eye-popping final figure. It's kind of crucial to note that this isn't a guaranteed price forecast. It's a theoretical scenario that helps us understand the upper limits of what might be possible. Now that we kind of know what the collateralization model is, let's get into the numbers that's kind of turning heads. A fair market value for XRP at a staggering $122,580 per token. Yes, you heard that correctly, six figures per XRP. How do you get there? Well, according to the model, the starting point is the total estimate value or estimated value of global wealth. Some estimates place total global wealth, counting everything from real estate to commodities, derivatives, and central bank reserves, to around $5.3 quadrillion. That number is mind-boggling on its own, but the collateralization model takes it a step further, applying a 1.25x risk adjustment factor and ratio, and basically projecting the tokenized economy into the future, specifically looking out for the year 2030. which is something that we've been talking about since 2020. Now, after these adjustments, the total tokenized economy is estimated to be around $6.2 quadrillion. Next, the model divides this colossal figure by XRP's circulating supply, roughly about 50.7 billion tokens. The end result, a valuation of approximately $122,580 per XRP token. Now, while these figures might seem outlandish compared to today's XRP price, which is, hovering around the kind of $2.40 at the time of recording, Val Hill's Capital's approach is not about predicting tomorrow's price. Instead, it's about painting a picture of a hypothetical future in which XRP becomes something akin to digital gold, but for the entire tokenized global economy. One might compare this valuation exercise to how some analysts value Bitcoin. We've all seen the predictions that Bitcoin could reach $500,000 or even $1 million someday, right? And often based on its kind of eventually surpassing gold's market cap. Here, the collateralization model is doing something similar for XRP, but taking it to another level by considering all encompassing tokenized world rather than just kind of focusing on a single asset class. The idea behind this valuation hinges on a massive assumption that we'll witness near total tokenization of global wealth in the coming years. Let's break down what that actually means, right? Tokenization involves taking real-world assets, say a building or a piece of art or even a basket of currencies, and representing it as a digital token on a blockchain. This tokenization improves liquidity, reduces friction in cross-border trading, and can democratize access to investments. In theory, you could own a fraction of a Picasso painting or a slice of prime real estate in Tokyo, all through tokens held in your digital wallet. But the collateralization model goes further than just representing niche assets. It envisions a future where the entire spectrum of global wealth, everything from central bank reserves to complex derivatives, is recorded on distributed ledgers. In this future scenario, the role of XRP isn't just a medium of exchange or a bridge currency, something that Ripple, the company associated with XRP, has been working on. Instead, XRP becomes the ultimate form of collateral that underpins these tokenized assets, giving them stability and, well, confidence. Ripple's CTO, David Schwartz, has indicated that the XRP ledger, XRPL, is already pivoting towards real-world assets, or RWA, tokenization. This suggests that the ecosystem developers are thinking about long-term applications of XRP that extend far beyond quick payments. If RWAs gain traction on XRPL, then maybe, just maybe, we'll see the first step towards this grand vision. What do you think? Could our entire financial system one day be mirrored on the blockchain, with tokens representing everything that we own and trade? Of course, no vision of the future is without its challenges, right? Achieving a fully tokenized global economy isn't just flipping a switch, right? There are significant technological and regulatory hurdles to consider. For starters, how do we ensure the security and authenticity of tokenized assets? Blockchain is secure, but the process of linking a digital token to a real-world asset is complex. There must be a robust legal framework, reliable asset custodians, and technology that can handle transactions at a massive scale. These issues like interoperability ensuring different blockchains systems can kind of talk to each other seamlessly, are still being worked on today, right? Regulators around the world are still trying to wrap their heads around cryptocurrencies, let alone a fully tokenized financial system. Governments, central banks, and international bodies would need to collaborate on standards that ensure transparency, fairness, and stability. The model might assume a level of regulatory cooperation and technological maturity that could take decades to achieve, if Well, ever, right? The collateralization model also acknowledges that unknown values, right? Assets that haven't even been considered or, inadequately priced could shift the numbers dramatically. Furthermore, just because something is tokenized doesn't mean its value is automatically stable or guaranteed to appreciate. Market forces, investor sentiment, and economic factors could still influence prices. If XRP is trading at roughly around $2.40 today, how can we even wrap our heads around a valuation of over $122,000? It's like comparing a cozy family sedan to kind of a futuristic kind of spaceship that we've only just seen in sci-fi movies, right? The key here is to understand that the collateralization model scenario is highly speculative. It relies on the assumption that XRP becomes the universal collateral for tokenized assets. That's not what XRP is doing today. Right now, XRP is best known for fast, low-cost cross-border payments and as a kind of bridge asset for currency conversions. Useful, but not an entire financial backbone of the globe, right? Now, remember, similar big picture valuations have been thrown around for other cryptocurrencies. Bitcoin enthusiasts argue that if Bitcoin becomes the world's digital store of value, surpassing gold's market cap, it could hit extremely high prices too. Ethereum proponents discuss the platform becoming the kind of base layer of Web3, potentially giving ETH sky-high valuations. What sets XRP scenario apart is the sheer ambition of it, right? The tokenization of all global wealth is an even more extreme outcome than Bitcoin or Ethereum's grand visions. It's about re-engineering the entire financial system on blockchain rails and having one token serve as the collateral for underpinning it all. Does that mean that you should rush out and buy XRP hoping for a $122,000 payday? Not necessarily. This model is more about understanding possibilities than it is about making concrete predictions. To better understand the magnitude of the collateralization model, let's compare this scenario to the narratives behind Bitcoin and Ethereum. Right? Bitcoin trends, right? Bitcoin's narrative has evolved from peer-to-peer electronic cash system into a store of value akin to digital gold. Many price predictions hinge on Bitcoin one day equaling or surpassing gold's market cap of around $10 to $12 trillion. If that happens, Bitcoin could indeed reach hundreds of thousands of dollars per coin. However, that pales in comparison to the 6.2 quadrillion tokenized economy scenario envisioned by the collateralization model for XRP. Ethereum's developments, right? So Ethereum is often kind of described as the world computer, where smart contracts can power decentralized applications, decentralized finance, and non-fungible tokens. Some kind of analysts predict that Ether could become the reserve currency of Web3. Even if Ethereum dominates a $1 trillion DeFi market, that's still a drop in the bucket compared to tokenizing all global wealth. In short, while Bitcoin and Ethereum have grand visions, the collateralization model for XRP imagines a future that is more transformative and thus assigns an even more astronomical valuation. This comparison helps us realize that all these future valuations depend on the underlying assumptions that cryptocurrencies and blockchains will reshape entire economies. Whether it's Bitcoin or Ethereum or XRP, these lofty numbers tell us one thing: the crypto market's potential is enormous if it achieves mainstream adoption on a world-changing scale. So what does this mean for everyday investors like you and I, and the kind of crypto enthusiasts, if you will, or even those kind of new to the space who are looking at the latest crypto news? Well, the biggest takeaway is not that you should expect XRP to hit $122,000 next year. That's highly improbable. Instead, the takeaway is that models like this challenge us to think bigger about what is possible when we talk about tokenization of assets and the role of cryptocurrencies and what they could play in the future financial system. For investors, it's a reminder that the crypto market is still very much in its infancy, right? It's like the early days of the internet. It's hard to predict exactly how things will pan out. Some visions may be too optimistic, while others may underestimate the kind of change that's coming. Keeping an eye on projects like XRP, Bitcoin, and Ethereum, and other promising coins can help you position yourself ahead of the new trend. I mean, just think about the internet days, in the very early days of that internet. You had Amazon, right? Everyone thought that who on earth is going to want to order a book online and have that delivered to you? Just go out to a bookstore. Why bother ordering these things on the internet, right? And well, we can see how things played out. And of course, we can see how Tesla was kind of touted for the electric car. And now look at where we are today, right? These things are possible, sure. They might not be probable in the short term, medium term, but in the long term, we never know. Now, this scenario, of course, it underscores the importance of diversification and research. The collateralization model is only one point of view. There are dozens of other models, each with their own assumptions. As always, do your own due diligence, consider multiple perspectives, and understand the risks involved in any investment. What do you think? Are you looking at a future where XRP or another crypto asset plays a role in collateralizing tokenized global wealth? Or is this just another pie in the sky scenario? It's worth noting that even though this particular valuation scenario seems extreme, we're already seeing steps towards asset tokenization. Platforms are emerging that let you invest in tokenized real estate, fractionalized art, and securitized commodities. Centralized bank digital currencies, CBDCs, are another piece of the puzzle, bridging and kind of bringing governments into the blockchain era. All of these developments could lay the groundwork for more complex tokenized economies down the line. If XRP or any other crypto asset is to serve as the universal collateral asset, it would need to have incredible, robust, universally trusted, and be integrated into global financial frameworks. Achieving that level of adoption is no small feat, right? It might require industry-wide standards, massive partnerships, and a whole new layer of infrastructure. Right now, the cryptocurrency market update is kind of more about incremental growth, regulatory developments, and innovations like layer 2 scaling solutions, stablecoins, and DeFi protocols. While these steps might seem small compared to a $6.2 trillion tokenized economy, they might be necessary building blocks. The crypto world is full of bold claims and daring visions, right? While $122,000 XRP might sound outlandish today, it serves as a reminder that we're playing in a field of unimaginable possibilities. The tokenization of assets, the restructuring of financial systems, and the integration of digital currencies into mainstream finance are all ongoing trends. Whether these kind of developments support a future mega valuation for XRP or not, they certainly point towards a rapidly evolving marketplace. Now, I'd like to hear your thoughts. What do you think about the collateralization model? And the possibility of XRP becoming a universal collateral asset? Do you believe in the future where all global wealth will be tokenized? Share your thoughts in the comments down below. If you found this update helpful and informative in any way, smash that like button, guys. I really do appreciate that. It helps the channel out massively. If you are new, subscribe, and don't forget to check that video out right there. It's one you don't want to miss.